Well, stocks are trading slightly lower this morning, but despite the red arrows on the board, all three averages are on track for the third straight week of gains. So, which sectors drove this week's markets rally? Let's bring in our very own Jared Blikre at his favorite spot by the
Yes.
Interactive.
You can always catch me here. Thank you, Akiko. Yeah, it's not just the U.S. Around the world, all of these indices are in the green, as you can see. The lowest one, China, that is the laggard, but Russell 2000 is number one in the world among most of the major indices. That's up 5.3%. If I just quickly pull up a 5-day chart, you can see after that monster day Tuesday, that was actually when we peaked, but we have only come off a little bit since then. On a 3-year basis, still camping out by these lows and in this giant trading range. But let me just tell you, I'm going to read off the countries on the top just to show what a broad swath this is. We have Brazil, we have Germany, Spain, Japan, Mexico, Saudi Arabia, all up more than 3%. And by the way, the Nasdaq's up 2.1%, the S&P 2, and the Dow is up 1.8%. But let me get to the sector action, and that's kind of what we're interested in here. Really interesting to see real estate up 4.4%. Not often that we get a big outsized day in real estate, but we did Tuesday. That was one of the biggest days in years, and you can see that monster gain, Monday. And then also taking a look at materials, we did have a huge drop in the dollar, biggest drop in one day earlier on Tuesday. Consumer discretionary, that's up 3.4. Financials, utilities, industrials, all of those outperforming the S&P 500. Just wanted to quickly show you what's happened over the last 15 days. Tech up 13%. That's when we got that rally off the October 27th lows. But just sticking with what we're seeing this week, I'm going to go into some of our leaders. First thing that sticks out, what's negative? Bito, that is my Bitcoin ETF. That's down 3%, although it did break out earlier than stock. So it's sitting on some nice gains over the last month. KRE, remember regional banks? Well, they're number one this week, up 9.5%. Then we have solar up 8%, disruption 8%, meme stock 6%, home builders, retail, small caps, that's the Russell 2000 ETF, and then it looks like transports as well. Interesting to track some of the disruption winners this week. Here we have the ARC components. Tesla had a really nice week, up 10%, Shopify 11%. One of the things I was writing about in the morning brief yesterday was this crowding that we tend to see at the end of the year. And indeed, we could very well see that. But my cautionary note is don't expect stocks like Peloton to get back to break even, those 2021 highs anytime soon. Also taking a look at China, it's been interesting. Alibaba had a pretty bad week. That was down 6%. But aside from that, China also joining the parade here. And then today's options expiration date, not any big fireworks, but another thing that happened this week was CPI. This chart goes back 4 years and it charts what happened on CPI days, job days, and Fed days. Those are the three big things guiding the market. And we had the biggest CPI day in exactly 1 year. And CPI has been closely tracking the rally in the S&P 500 that we see in the purple line. Suffice to say, investors are looking for that end of the year ride here. Here's what the VIX tends to do into the end of the year. That is go down. That means it's bullish for stocks. And here's what it has actually done. So maybe some of the heavy lifting been done. We'll have to see. But hopes for the end of November are that we do get a continued rally into the end of the month. And that has been the case so far, guys.
Jared, is it still too early to predict a Santa Claus rally?
In light of the fact that we have pumpkin spice lattes in August, I don't think so, although I would avoid it. Ask me again next week.
Will do. Our very own Jared Blikre, thank you so much.